In today's video, I'm going to share with you all of our holdings, the 4 new positions I started, and we're going to dive in to make sure my holdings still continue to align with my investing strategy, which if you haven't seen, I'll link in the description and comments below, but it's really pretty simple and it starts with my goal, which is to add an additional $2,000 in dividend income this year. And if you look at my dividend gauge here up on the top left, which I'm going to attempt to zoom in on, oh, that's much better. And what you can see is that right now the total dividend portfolio value is at $56,795.36. But what's most important to me and exciting is the annual dividend income gauge right below that, where you can see I've set a new goal. And the goal is another $2,000 to the $1,500 that we earned last year in dividend income, which puts us at $3,514.59. And you can see here, based on our current holdings, we're slated to hit about $2,987. So I'm hopeful with all the additions that I'm going to continue to make on a weekly basis, we'll be able to make up the remainder of what's missing to get to that $3,514. So if we zoom back out, you can see that I switched some things around on my dividend dashboard. And now across the top, I've got a listing of all of the holdings that we have, and presently there are 35, and how much we can expect to receive in dividend income from each of those holdings. I did add a couple of things, and honestly my goal during my last video was to pare things down a bit, and I actually added 5 new positions. Among them are Avgo, which is Broadcom, a tiny little position in DGRO, Lowe's, and the last one I added was Snap-on, which I'm super excited about all these new positions, so hopefully we're moving in a good direction. On the bottom left here, you can see my monthly dividend income, and let's zoom in on that a little bit as well so you can see what that looks like. Right now, this is set up for 2022, and I'm really excited for those January dividends to start rolling in so we can start to stack up month against month to see how much we're actually gaining throughout this next year. Now, I actually just updated the title of this pie graph because really it's a breakdown of the current holdings by sector. And you can see here that I'm really working towards increasing the percentage of my holdings that are actually in those core ETFs, and I've made it up to 12%. So this is continuing to push through. My goal is to get to 50% in ETFs and the rest within these other sectors. Now, if we look more specifically at each of the 35 holdings that we have, again, we've got those 4 ETFs and the rest are in individual holdings across all the different sectors. One of the things that I did to update this, which will help me to keep myself accountable based on the strategy that I've set forward for myself, is what you'll see here in columns H, I, and J, and K. Column H is the payout ratio. Now again, I'm looking for companies that have a payout ratio less than 60%. That being said, we're going to find that real estate investment trusts, master limited partnerships, as well as business development companies are going to tend to have a higher payout ratio, and that's just based on how their companies are structured. The next piece that we're looking at is that 5-year compound annual growth rate of the dividend, and I'm looking for companies that are giving me at least 6%. Next up is the years of dividend increases, and I would like for that to be at least 5 years. And finally, looking at the PE. Now, would I like to enter a position when the company has a PE of less than 20? Absolutely. Does it mean that if it's over 20 that I'm pulling them out of my portfolio? Not at all. It just means that it's not the right time to add to that portfolio position. And AbbVie is actually a great example of that. So if we start right here with AbbVie, you can see the PE is at 22.19, but they've got 9 years of dividend increases, 5-year dividend growth rate of 17.26%, and a payout ratio at 41. So I'm pretty happy with AbbVie right now, and that's going to stay in my portfolio. Arbor Realty Trust, again, this is it's actually a mortgage REIT, but it does fall into the real estate investment trust, so I'm not very worried about that 81%. Algonquin does concern me a little bit. It is at risk of performing badly. Payout ratio is over 101% right now, meaning they don't have the cash flow to continue to pay their dividend, so I'm a little concerned that they may drop their dividend, so that's something that I'm keeping an eye on. Broadcom is one of my newer positions, and you can see I only have 0.116 of a share because they're over $500 a share right now, $588. All the metrics here look pretty good to me. Again, the PE is a little bit on the higher side, so it may not be a time for me to continue to add, even though I probably will. It doesn't scare me off at all. Bearings I've been talking about for months. This is a business development company, and it has a negative 5-year compound annual growth rate, only 3 years of dividend increases, and a payout ratio at 92%. CareTrust REIT, again, we have a negative payout ratio. I need to do a deeper dive into that and see what's happening here. Chevron, I'm not super concerned about this. They're just under 6% in terms of their growth rate. DGRO is one of my newer ETFs that I've added to the mix, and they've got a 5-year dividend growth rate of 10.68% in 8 years of growth. EPD with an 80% payout ratio and only 2.43% of dividend growth in the last 5 years, but they've got a PE of 10.88 and 23 years of increasing their dividends. So again, we're going to hang on to that. Home Depot, a newer position for me, but metrics are all looking pretty good. HDV, another ETF in the portfolio. We'll see what happens with that in terms of their increasing of dividend and their ability to grow things. Hershey with a very high PE right now at 34.58%. All the other metrics at Hershey's are looking really good for me, and I'm going to keep on buying. Up next is Intel, and their metrics overall are fairly good. They are meeting my standards. JEPI, another ETF in the portfolio, and I will continue to add 1 share every Monday of JEPI moving forward, and that again is in my Roth IRA. Johnson & Johnson, holding strong. PE is a little on the higher side, so maybe not the point to enter into a position or add one right now. 60 years of dividend growth. Lockheed Martin, strong metrics overall. PE is just at 21.73. We'll continue to add to that position. Lowe's is another one of my newer positions. I love everything about it. Looking good overall. Main Street Capital, this is a business development company and definitely one for me to keep an eye on. Medtronic, good metrics. PE is a little bit on the higher side right now. 3M, not really adding much to this right now, just kind of waiting to see what's going to happen. Altria Group with a higher payout ratio. Again, keeping an eye on that. Realty Income, again, real estate investment trust. Olin Corporation with 0 increases in their dividend and no growth in the last 5 years, something to keep an eye on. Pepsi, higher payout ratio overall at 66.92%. PE is a little high right now at 25.91, but again, I'm going to continue to invest in Pepsi. Pfizer, metrics look good overall, just under 6% in terms of the dividend growth in the last 5 years. Procter & Gamble, similar scenario, just over 61%. PE is a little high right now, but I'll continue to invest there. I'd like to see a little bit more growth out of Philip Morris and a little less in their payout ratio. Raytheon, very high PE at 34.31. Maybe not the best time to enter into a position, but I'm going to keep it in the portfolio. I like what it's done for me so far. SCHD, I continue to add 1 share every Monday. Snap-on is another one of my newer positions with a just under 15% 5-year compound annual growth rate, 13 years of dividends, a PE of 14.39 and 34% in terms of payout ratio. I love everything about Snap-on. Stag Industrials, not a lot on the growth side. PE is a little on the higher side, but this is a real estate investment trust. AT&T, I think we're all waiting to see what's going to happen here. I may not be adding too many more shares to this, but I'm definitely not going to sell out. TD Bank, pretty solid overall in terms of my dividend investing metrics. Same for T Rowe with 16% compound annual growth rate in the last 5 years. And Verizon, slower on the growth, but overall some pretty solid metrics overall. So that's part 1 in the portfolio deep dive. The next video I'm going to put out is going to include all of these companies compared within the sectors to the S&P 500 for their total return. So watch out for that one next. But for now, take a peek at this video.